Llévate más de lo que esperas todos los días con el nuevo McValue en McDonald's. Ahora puedes comprar uno y sumarle otro por $1. Así que cuando tu equipo favorito enfrente a sus rivales, enfrenta tus antojos con $5 Meal Deals. Y si estás corriendo para alcanzar el desayuno, corre a la app para llevarte ofertas antes del cutoff. Tú decides, y con McValue, tu decisión siempre rinde más. Precios y participación pueden variar. BOGO $1 válido para un producto de igual o menor valor. Debe estar registrado en Rewards para ofertas en el app.
Have on the show David Bahnsen, who's one of the top Wall Street gurus of all time, a good friend of Unleash Prosperity. He's written several books, including No Such Thing. What is it? No Such Thing as a Free Lunch, David?
There's no free lunch.
No free lunch. And I love that. It comes right out of Milton Friedman. So it's such a busy week. You could get motion sickness this week watching the stock market, David. Give me your sense of how Trump is handling this. Do you agree with his policies? Do you think he's doing the right thing? As I read it, David, it looks to me like he's trying to sort of isolate China as the bad actor, and I kind of like that idea. But will that strategy work? And do you agree with it?
Well, the problem, Steve, is that you know how much I do agree with the president on, particularly when it came to that historical corporate tax reform bill in 2017,
right.
particularly when it comes to energy independence, when it comes to deregulation. So I think it's important for those of us who often agree with the president, but sometimes don't, to use that context, because so many people irrationally criticize everything he does or irrationally praise everything he does. And I want people to understand that I'm not coming at this from any kind of irrational perspective. It's just, I want to call balls and strikes as an economist and as a student of financial markets.
And by the way, let me just interrupt you for 1 second, David, because I love what you're saying, because my complaint with Wall Street and the traders is they seem to be hyper obsessed with the tariff issue and not looking at all these amazing positive things that he's doing for the economy, the deregulation, the tax cut to come, the pro energy policies. And I don't know why that is, because if you look at everything in total, it's very pro investor, pro America.
But Steve, the thing is that, and I think you know this, and I know it's easy to say Wall Street and they, but who is Wall Street and who is they? It's financial markets that represent millions of people acting in their own self-interest.
Right. That's true.
And price discovery. You talked about my book. There's no free lunch. Price discovery is the heart of Friedrich Hayek and what we believe about a market economy. We need prices to act as signals and information for people to make decisions on. And markets give us access to prices. And what markets have been responding to since the Rose Garden ceremony is not that we might get extension of the Trump tax cuts. It's not that that was already priced in. Markets did respond to deregulation. They did respond to energy independence. Markets went up thousands of points after he was elected. Right. It's just that since then, they didn't see a lot of action on some of those things. And what they did see was not isolating China. What they saw was the president really make his efforts with China a lot harder by lumping in with that effort a war and trade on every other country. He had spent a couple of weeks saying it was going to be based on reciprocity. It was going to be based on fairness. And then lo and behold, Switzerland, who had no tariffs on us, was getting hit harder than other European countries that had higher tariffs. So that's really been a lot of the challenge in markets, is they're not getting a clear signal as to what the objective is.
So I agree with that totally. I think that that he has kind of gone after everybody at once, and it's never very smart to front a multi-front war. And I wish he had really honed in on the countries that are really abusive. And China, I mean, certainly Canada is not one of them. And there are some trade abuses, but they're one of our most important allies. But let me just ask you a question, by the way. I was thinking of this when you were talking. You were basically making the point that, of course, that markets are pretty rational. We believe that, and that you get, hundreds of millions of investors all over the world that are looking at what's happening, and they're making their decision about where to place their capital. And I was wondering, do you think, David, how influenced do you think investors are by the media? By the media portrayal of what's happening than the reality of what's happening.
You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
At Capella University, you can learn at your own pace with our FlexPath learning format. Take 1 or 2 courses at a time and complete as many as you can in a 12-week billing session. With FlexPath, you can even finish the bachelor's degree you started in 22 months for $20,000. A different future is closer than you think with Capella University. Learn more at capella.edu. Fastest 25% of students. Cost varies by pace, transfer credits, and other factors. Fees apply.
Did you know that parents rank financial literacy as the #1 most difficult life skill to teach? Meet Greenlight, the debit card and money app for families. With Greenlight, you can send money to kids quickly, set up chores, automate allowance, and keep an eye on your kids' spending with real-time notifications. Kids learn to earn, save, and spend wisely, and parents can rest easy knowing their kids are learning about money with guardrails in place. Try Greenlight risk-free today at greenlight.com/Spotify.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Well, investors are generally human beings, and human beings are generally very influenced by their emotions, and the media is a master at manipulating emotions.
Right.
But the problem is, I want to be a little bit bipartisan here. I spent a few years watching Republicans say every single day the market went down, it was Biden's fault, or every time egg prices went up, it was Biden's fault. And so, I'm not exactly surprised that the media is trying to pile on President Trump. There's just partisanship all through the media, and it's the way the world works these days. But investors are not stupid. When you're talking about hedge funds and asset managers and investment banks and sovereign wealth funds, these are people that I trust to make financial decisions for their own money more than I trust the government to make financial decisions for our money, right? And I believe that what has happened is a very high degree of uncertainty, which is the worst thing that you can have in markets. So look, the China thing right now, I mean, whether they end up at 140% tariff from us and China's retaliated at 100%, those numbers went up and up throughout last week. And I think, Steve, I don't know where it's going to go next week, but they're not doing that to leave 100% tariffs on the 2 largest economic superpowers in the world. They're doing it to force someone's hand to a point of a deal.
That's true.
There's a lot of issues with China. President Trump is a deal maker. I get all of it. My criticism is not on trying to get a better deal with China. I'm for that outcome, but I don't believe the chaos and break things as a way of getting something done is not my preferred approach, because along the way, and this is something you know about, the Committee to Unleash Prosperity knows about, we can't delay the supply side of the economy. We need to be producing goods and services, and businesses right now are at a standstill.
So let me ask you another question related to this. So, I do some work at the Heritage Foundation, one of the most important conservative think tanks in America, if not the whole world. And they've been talking a lot, David, about a kind of decoupling from China. And of course, I think that's where Trump kind of wants to take us, is to decouple our economy as much as possible from China. And I'm not asking whether you support or oppose that policy. I'm asking, do you think it can, in other words, how big of a hit would our economy take if we went forward with this idea of just isolating China and almost embargoing their products? And again, I'm not saying this is a good or bad thing. I'm just saying some people are arguing for this. Is it a rational policy? Can it work? How big of a hit would we take if we tried that?
It all depends, Steve, on how it were done. If you try to do it in what took 30 years to come together, and you try to undo it in 30 days, then you would devastate. And I mean devastate the economy.
Right.
Okay.
You have to ramp it down.
You have to ramp it down, and you also have to be honest with the American people. You and I are so critical when Joe Biden would mislead the American people about what was going on with inflation, what's going on with policy.
Right.
You can't say that by decoupling from China, you're bringing all the jobs to Ohio the next day. Okay.
Right.
We saw in the first Trump administration a lot of success in getting some modest decoupling out of China, about $40 billion a year. Every dollar of it went to Mexico, South Korea, Vietnam. You're going to reshore, but not onshore some of this. Now, some of it can be onshored if we get our tax and regulation policy right. Some of it can't be, okay? We can't make coffee in America. We can't make mangoes in America. We can't get chocolate the way we do from Switzerland, right? There's certain comparative advantages that I'm not giving up on, no matter how nice the populist lingo sounds some days. But with China, we can decouple, but you have to do it incrementally.
Right. Well, I've come to the conclusion that an incremental, retreat from China might be a good thing. I don't trust that country. I think they lie, they cheat, they steal. I think they're more and more a national security threat. And maybe it'd be good policy. We were trading with Japan up until practically the eve of World War II when they dropped the bombs on Pearl Harbor. So and I'm a free trade guy. I know you are. I just was curious about what you thought about that. I don't see how China can. Well, let me put it like this. What Donald Trump would say is that they need us a lot more than we need them. Do you agree with that?
I agree in the way he means it, but I vehemently disagree in the way that matters. Okay. Because the American people have absolutely no tolerance for economic pain. And this idea that we can go give speeches or that we can have right-wing tweets saying, hey, everyone, we got to suck it up, it's not going to happen. We don't tolerate inflation. We certainly don't tolerate a recession. The Chinese people do have more to lose than we do. But the Chinese people are used to losing. Right. And they have a political structure as an anti-democratic society that Xi isn't up for re-election next year, but 235 Republican congressmen are.
Right. Exactly.
Okay. So it's a very different political reality, which is why incrementalism is a better way to do this than Leninism and some sort of just extreme revolutionary approach. Now, by the way, I want to sound crazy myself for a minute here, Steve. I don't want an incremental approach with China on national security issues. Any product that we rely on them to import, to export to us that we need for national security, I want to address that immediately. But I'm referring to these things about shoelaces and certain plastic goods and other components that have helped create, disinflationary prices for consumers over the years, and Heritage's desire to decouple from that. That, I believe, has to be done incrementally. The economic such. I was about to give the example. I have a client who makes all the lightsabers for the Walt Disney Company. And they do just tons and tons of business, and they manufacture in China. And I said, how long would it take for you to move it? And he said, it's the IP is the problem. It's complicated digital technology that Vietnam can't do, that Arizona can't do, that Ohio, it would take a while to move it. So they want to move it, but it's going to take a little while. We have to have a plan for that, Steve.
So talking to David Bahnsen, by the way, who you see David on Fox and Fox Business News all of the time. He's one of the top investment gurus in the country and is the author of No Such Thing as a Free Lunch. Two quick questions on the way out, David. First, I keep hearing all this talk about the bond vigilantes. And in fact, I've been getting texts all week about the vigilantes are trying to destroy the stock market and this and that. I don't quite know what that means, but I'm getting bombarded with these texts. What does that even mean? And can bond vigilantes destroy the market?
Well, I assure you, if you don't know what it means, the people saying it to you also don't know what it means. But what they're referring to is that the 10-year bond yield, which, by the way, a few weeks ago was at 4.5%, not hardly a very high number. And it dropped to about 3.8%, 3.85 in the low of all of this stuff that was happening because of assumptions that we were going to go into recession, downward expectations for growth, things like that. And then it did this week spike up a bit, and it had come down quickly to 3.9, and then it went up pretty quickly to 4.4, which is a whopping where it was 3 weeks ago number, okay? Not that big of a deal. And so the people saying, oh, it's bond vigilantes, those folks, the bond market is punishing the administration for all this uncertainty. Well, the more likely scenario for people who understand markets is that everybody had seen their stock portfolio drop 20 to 30%. And anyone who needed to raise cash was done selling stocks. They had to go start selling bonds. And this isn't, and people go, well, Mr. and Mrs. Smith can't move the market. That's right. But hedge funds, sovereign wealth funds. Now, do I think Japan was selling some bonds last week? I do. But that's not the bond vigilantes. The bond market is the greatest price discovery the world has ever seen. Trillions of dollars of highly liquid assets that reflect what people believe about America, period.
So final question on the way out, David Bahnsen. Investors are very nervous. I know my listeners call in and they're on the ledge right now. What advice do you give them, the mom and pop investor just trying to protect their 401k plan? What's the best strategy in this topsy-turvy market?
Well, last week after the Rose Garden, you had down 2,000, then down 3,000, then down more the Monday, Tuesday, and then you were up 3,000 when President Trump followed the advice of a certain friend of mine, Steve Moore and Art Laffer, publishing a wonderful piece in the Wall Street Journal about a 90-day pause to go work out deals with other countries. And then the market whipsawed higher. Then it goes lower the next day and so forth. There's a lot of volatility. The reason I bring all that up, Steve, is investors cannot think that they can time this, that they can go in and out of what's going to happen.
You can't time it.
I'm not convinced. I'm not convinced that President Trump knows exactly what he's going to do the next day. I know the markets don't know what's going to happen the next day. Therefore, you don't know what's going to happen the next day.
So what do we do?
You have to write it out. You have to write it out because people have gone through this before and through much worse things.
At BP, we've reset our strategy with a focused downstream, a growing upstream, and disciplined investment in the transition. See how we'll grow shareholder value at bp.com/reset.